Hello, trading friends, and welcome back to Forex Focus, brought to you by IG. What a move in gold we're seeing, back above 2100 and hitting all-time highs here, set to close at all-time highs. Now, a little bit of nuance, as gold, you'll remember a few months ago, intraday traded much higher than 2100, but where the market is currently set to close would be all-time highs in terms of gold futures closing since the creation of the product. Either way, very expensive gold prices, quite historic, and we'll see where they can go from here as the gold market has been range bound, which we'll look at in just a second for the last several months, really. But what's particularly interesting about this is occurring amid strong U.S. dollar and U.S. rates. Not really been the historical correlation, is an all-time high gold market and U.S. dollar, maybe not all-time highs, but relatively strong still, holding on to a lot of the gains from the last couple of years, and U.S. interest rates still holding in above 4% across the Treasury curve, and the Fed, of course, hasn't cut rates even once. They're still above 5% with their overnight benchmark rate. But let's start with gold, a market that, like I say, is climbing above 2100 and set to close at all-time highs in terms of the gold futures market. Absolutely unbelievable. And you can see the last couple of months has really been an exercise in range-bound trading between $2,000 and 2100. And the one breakout that we did get, because like I say, there was an intraday high, higher than where we're currently trading, and I believe that was a Sunday night or around the start of the current war in the Middle East, and the market opened higher and traded through those highs on Sunday night if you're here in the U.S., and then by Monday afternoon had closed actually lower on the session and much lower than those highs. But right now, the market just comfortably moving through these highs. We'll see if this is the start of a new range, because you might take a look at the historical gold chart and identify the fact that, it tends to trade over the course of weeks and months in, $50 to $100 ranges. It will spend some time between 1900 and 2000. 2000 and 2100 has been obviously the last several months here. Is it going to be able to hold in above 2100 or make new highs, which it hasn't done the last several months? We'll see. I think that's what a lot of people are wondering. Or is this just kind of searching for new highs on a market that will reverse back down close to $2,000? Anything on the table as volatility starts to escalate in this precious metals market. Silver also moving higher as well. And now, if you gave me no other context and dropped me into this situation and said, well, what do you think is happening for U.S. dollar and U.S. rates? I might expect that they're going lower, right? That's what they might teach you theoretically. The textbook version would be, gold prices moving higher and gold here priced in U.S. dollars moving lower, and interest rates moving lower as well, as gold is a non-interest bearing asset. Haven't been seeing it. U.S. dollar, I mean, it's not witnessing those all-time highs like gold, but not far from historic highs. Looking here at dollar yen, you're not seeing the kind of like mirror image that you would maybe expect, the inverse action of U.S. dollar moving lower. And two, you'll remember that the 30-year high in this dollar yen market that we saw a handful of months ago is around 151 to 152, and the dollar against the yen is right now trading above 150. And so strong U.S. dollar, I guess, is what you're saying. Of course, it's a little weaker versus the euro or the pound, but still, historically speaking, strong U.S. dollar for even those pairs going back the last several years. And we'll bring in some U.S. rate action here as well. because, again, you would expect that interest rates are moving lower to maybe spur on some of this gold upside through all-time highs, and not the case. And in fact, on this day that gold is set to potentially close at an all-time new high, U.S. rates are moving higher today. They're bouncing back a little bit. After last week, they moved a little bit lower. The 10-year has bounced back above 4.2%. Again, the Fed has not cut interest rates yet. And the market here across the U.S. Treasury curve is holding above 4%, not necessarily taking a dive down close to 2% or 1%. Or remember, short-term rates and the Fed funds rate was 0% for the longest time, as you might expect, because historically, and let's take a look at gold and the 10-year yield overlaid on top of each other now. Historically, you might look at 2022. U.S. rates are moving higher if you're looking at the left part of this chart, and gold prices were moving lower. You see that little mirror image. And then to start 2023, U.S. rates kind of fall from their highs a little bit, and the gold market is surging in parts of 2023. That blue line is moving higher, and that red line is taking a break. And then U.S. yields take another leg higher there at the end of 2023, and the gold market is moving a little bit lower. Now, in recent trade, you're seeing, if you look at really just the last month or two, the last couple of months since pretty much the end of 2023 there, the red line and blue line, gold and yields, moving higher. And yields aren't making new highs, but they're higher than they were in December. And gold prices are higher than they were in December, and potentially here trading at all-time highs since the gold futures started trading from the CME back in I believe it was the 90s, but don't quote me on that. And this makes sense, right? Gold's a non-interest-bearing asset that tends to rise in value and rise in demand when interest rates are low, whereas you saw gold prices moving lower in 2022, for example, as U.S. interest rates were moving higher, because it's like, if I'm going to buy a flight to quality market and treasuries are essentially theoretically as safe as an asset you can get, they're backed by the U.S. here, and they're going to offer me 3, 4, 5%, well, I'm going to sell my gold and I'm going to buy U.S. treasuries, theoretically. And now you're seeing that 10-year still above 4%, and gold prices, showing some of the greatest demand given that they're at all-time high prices. And you bring in the historical piece for U.S. dollar and maybe think, where could we be going next? For all three of these markets? Well, for the time being, they're all pretty content being on the more expensive side than where they have been historically. As you can see here, again, this dollar right there near its historic highs. And those highs that you see of a number of a few months ago, 30-year highs for U.S. dollar in this dollar-yen market. So right now, content, the correlation seems to not really be there. What has historically been an inverse correlation between gold and U.S. rates and U.S. dollar, we're not seeing it right now. If it does come back, that negative correlation between these markets, and gold continues to the upside, this dollar could reverse a lot. Now, if that correlation kicks in, it could kick in two ways, right? Gold could move off of its highs down to 2,000, 1,900, or what have you, and maybe that lifts at the same time. Of course, one doesn't move the other, but at the same time, you could see U.S. dollar and U.S. rates move to the upside. But yeah, a lot of room for reversal for this dollar if gold moves to further new highs and these correlations, the negative historical correlations, kick in. But for the time being, gold making some new all-time highs, and U.S. rates and U.S. dollar holding in pretty good.